Okay, good morning and welcome to Chaikin PowerFeed TV. The Chaikin PowerFeed is your daily market digest. Today is Thursday, May 3rd, 2018, and I am Dan Russo, your host for today's show, as well as the chief market strategist at Chaikin Analytics. You can also find me on Twitter. I am at Dan_Russo_CMT. Chaikin PowerFeed TV brought to you by Chaikin Analytics. You can get your free daily Chaikin Power Feed at www.chaikinanalytics.com/PowerFeed TV. So let's just kind of recap yesterday. U.S. equities were mostly lower in Wednesday's trading. Consumer staples and telecoms were the biggest decliners. Shouldn't be a surprise. They've been two of the weakest groups within the market. Strength continues to be seen in energy. They were the only sector to finish higher yesterday. Treasuries were mixed with a bit of curve steepening. The dollar was little changed against the yen, but stronger against the euro. A strengthening dollar is a big theme that we are keeping an eye on. Gold settled down about 10 basis points, but was higher after the Fed's decision, and crude oil finished up about 1%. Obviously, that helped the energy sector. Fed wrapped up a two-day meeting yesterday. It was mostly a non-event as they left rates unchanged, and its statement was mostly in line with the market's expectations. Apple traded higher following a better-than-feared earnings report and the announcement of a $100 billion buyback. An internet name Snap, SNAP, fell more than 20% as 1Q revenues missed expectations. Let's kind of dive right into the market here now. As always, we were looking at our key levels. Given the fact that we remain in the trading range and not much has changed in terms of key levels, we're looking at 2614, which is the rising 200-day moving average. Then 2581, that was the February 8th closed, as well as other opens and closes. And then below that, 2545 and 2533, those were two of the extreme lows throughout this consolidation. Those are your support levels. On the upside, resistance remains in the 2658 to 2675 zone of prior highs, lows, and closes. And it really is amazing how the market has respected this level the past couple of days. And then just this zone in general is really being respected as resistance. Above that, 2710 was the top of the March 22nd gap. That was resistance about a week and a half ago, and then 2741. So if you're bullish here, you want to see us start to take out these resistance levels and ultimately get above 2741 to give you confidence that the secular uptrend is resuming. And if you're a bear, you want to see a clean break of the 200-day moving average, not these little probes. A clean break and then an undercut of the February lows. That would give you conviction that the market is in fact reversing the secular trend. Turning now to what's your market in a minute, which you would receive every day with PowerFeed. As we said, the S&P 500 closed lower after failing at that 2658 resistance level. The Fed did leave rates unchanged. Last night's conference call for Tesla can only be termed as dramatic, with Elon Musk cutting off Wall Street analysts and during the Q&A session to take questions from those on YouTube. That immediately put the stock under pressure. Last night after hours, I expect the stock to be under pressure today. It is trading down about 5% in the pre-market. Every Thursday in my morning note to Chaikin Analytics subscribers, I look at market breadth, and market breadth measures remain constructive. We'll go through some of what I'm looking at that later in this presentation. And as we speak, futures point to a slightly positive open. Looking at the major indices, and according to the Chaikin Power Bars, large cap stocks are more bearish than small cap stocks, and the major indices are mixed. You can see that here. The Chaikin Power Bars on the indices tell us how many stocks within that particular index have very bullish or bullish ratings. That's green, neutral, yellow, very bearish or bearish ratings here in the red. And we can see the Dow is slightly skewed to the negative side, 6 bearish or very bearish names for 5 bullish or very bullish names. The S&P 500 continues to skew to the bearish side, and that also combines with some negative money flow that we've been talking about in our notes. You can see it here, 52 for the bulls, 123 for the bears. NASDAQ, same story, skewed to the bearish side, but small caps are bucking the trend. Small caps are skewed to the bullish side with 394 names, either bullish or very bullish, against 360, which are either bearish or very bearish. Theme that we continue to harp on is ongoing outperformance by the small cap stocks relative to large. It's a function of the stronger dollar, in my opinion. Also a function of concerns about trade. As we've been grinding through earnings season, some of the headlines around trade have moved to the back burner, but I do not believe they are gone. And once we get through earnings, I would not be surprised to see trade concerns rear their head again. Bonds trading lower, yields moving higher. Lot of talk about the 3% level. I do see upside in the 10-year yield to about 3.2%, but I have noted in my morning notes that it's not really a concern for the equity markets until we get to about the 5% level. But the path of least resistance for Treasury yields does appear to be higher. Turning now to our stock of the day. Every day, our PowerFeed subscribers receive a stock of the day. It's based off of the Chaikin Power Gauge. Today's stock of the day is Angiodynamics, coming to us from the Medical Products Group. Closed at 19.29 last night, down close to 1%. However, the Chaikin Power Gauge rating for Angiodynamics, as I said, is very bullish, and that is due to attractive financial metrics, very strong technicals, the price and volume activity, as well as strong earnings performance. The stock does, however, have some negative expert activity, so that is something we'll keep an eye on. Turning to the chart now, as I said, very bullish power gauge ratings, strong trend in a strong industry. And what's interesting to me here is what we're going to talk about in a minute, which is a personality change. We read our charts from the bottom up at Chaikin Analytics. The ribbon at the bottom tells us where the power gauge has been. Green signifying that we are, in fact, very bullish. But here's the personality change that I'm talking about. Relative strength versus the SPY strongly shifts to outperformance. And what we want to see is the two of these being in gear. A bullish or very bullish power gauge rating with strong relative strength. That means the market agrees with our model. That is a compelling setup for long ideas. After gapping higher following EPS, the stock is consolidating a little bit, and that has caused it to become oversold based on our overbought, oversold indicator. So a potential compelling entry point here above support at the 18 to 1850 level. We have this gap here. We are above a rising long-term trend line and trading towards the middle of our volatility bands. But here's what's interesting as well. Money flow, which is a signal of institutional supply or demand, has really turned strong here. Angiodynamics, an interesting stock to look at on the long side, definitely one that I'll be watching going forward. Keep this one on your bullish watch list if you maintain one. Ticker symbol, as I said, ANGO, Angiodynamics. Turning now to our sector tracker, this kind of gives us a snapshot of how the main sectors have moved over the last 5 days. Real estate really strong, up over 2.5%. A little bit of a flight to safety there, in my opinion, as well as the fact that the sector had just become so beaten down. So flight to safety, as well as some short covering, causing real estate to be an outperformer lately. Technology strong. Obviously, Apple being up 4% yesterday really helped that. Utilities, another flight to safety. Discretionary, there's a lot of Amazon in there, but discretionary has been strong away from Amazon as well. One of the themes that I've been focused on is what I call a retail renaissance. A lot of the retail names had been left for dead towards the end of last year, with a kind of a high-level thesis that Amazon was going to put all these brick and mortar stores out of business. I'm not in a position to argue whether that's true or not. I just can say it doesn't seem like it's happening anytime soon. Retail names have actually been holding up very well. Bottom of the barrel, consumer staples have been an absolute disaster. That sector is down 2.33% over the past 5 days. And industrials, kind of weak earnings, some fears of this being a peak quarter, as well as there being peak margins creeping into there. And again, as I said, trade concerns would impact the industrials probably more than any other sector in the market. So keep an eye on that on the bearish side. We always have an industry in focus. Today's industry in focus is insurance services. Looking at the power bars, we can see the skew to the negative side, 6 bearish or very bearish stocks for 3 bullish or very bullish stocks. Over the past 6 months, the insurance subsector has underperformed the S&P 500 by 1.63%. As I said, power bar ratio, which measures future potential, is weak with more bearish than bullish stocks. It's currently ranked in the bottom third of the 21 subsectors that we look at number 14, and it's moved down 7 slots over the past week. You know, financials have been a sector that's held up relatively well. It's seen some outperformance relative to the broader market, but if you dig in within the financial sector, insurance has been the weak spot within that group. So we can see some of the indicative names within that group. Pro Assurance, ticker PRA, a very bearish power gauge rating. Aon PLC, ticker AON, also very bearish. And FNF Group, very bearish power gauge rating. So some weak stocks in a weak industry. Those are your short idea candidates as far as I'm concerned. If you're taking a top-down view, if you want to looking for shorts, you want to identify the weakest stocks in the weakest sectors of the market. So let's look at one of those stocks now. Very bearish rating, FNF Group. Here's your very bearish Chaikin power gauge rating. We can see here that the trend is strong, is weak rather. So again, as I said, reading the chart from the bottom up, the red on the bottom here in the ribbon tells us where the power gauge rating is. It is very bearish. Here's that personality change I talk about. After briefly trying to become positive, FNF is once again underperforming the SPY. So the market, in agreement with the model here, underperformance on a very bearish rated stock. That is a name that you want to potentially look at to lighten up a long position or even open a short position. Overbought, oversold. Maybe you don't want to put them out right here. Stock is currently oversold. Maybe you want to wait for the stock to rally back to the 38 to 40 level. But look at money flow. Money flow has been absolutely horrendous. Institutions are unloading the stock. Negative money flow, kind of at the worst levels it's been over the past 12 months. You can see that here. Again, stock trading underneath a long-term trend line, but as we said, it is kind of towards the bottom of our volatility band, so maybe you want to wait for it to pop up. Either way, it's one you want to be look at to lighten up on rallies or even open a short position. Certainly one that I will put on my watch list. I maintain a bearish watch list, and I will put it on that list. So looking at some earnings from yesterday, Yum Brands, APA, Marathon, MasterCard, and Sprint all beat expectations. Marathon, a recipient of higher oil prices, helping them out. MasterCard, just a secular winner. Again, you know, throughout earnings season, stocks have been beating expectations, but the market has not been able to get out of this kind of consolidation that it's been in. It's a theme that we've been harping on. It's one we'll continue to watch. Thursday, another busy day for earnings. You can see some of the names that are reporting here. So we suggest caution if you're holding any of these bearish stocks ahead of earnings. So earnings season continues to grind on. You know, something I touched on in my note today is breadth, as I said, and this is indicative of that. The percent of S&P 500 names above their 200-day moving average, something I like to keep an eye on for an indication of the health of the market. And what's interesting to me here is that we maintain above this 50% level, and that subsequent tests of the 200-day moving average have not caused this metric to break lower. I looked at the data going back to about 2010, and when this metric is over 50%, the market is higher one quarter later, 80% of the time, for a median return of about 3.64%. That's based on the data that I'm looking at. So breadth remains constructive for the market. I would love to see this metric move back over the 60% level with a move higher in the market here. As you can see, we do remain in the consolidation. I still view it as a consolidation within the secular uptrend, and some of the breadth measures that I watch do confirm that view. But as always, we have to let price dictate. So turning quickly to today's action, as I said, futures are pointing to a slightly higher open. As I said, still another busy day for earnings. Treasuries are a bit higher across the curve, and the dollar is giving back some recent gains. Gold is up about 50 basis points, and oil is positive by about 20 basis points. You can get a lot of this information every day as a PowerFeed subscriber. It is free from Chaikin Analytics, www.chaikinanalytics.com/PowerFeed TV. Good luck trading, everybody. Have a great day.